Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock. With news, all eyes are on key data this week as economic concerns rise. The coming week will provide clues on whether the global economy is escaping from its lackluster growth rut amid growing angst of another downturn, which central banks have few tools left to fight. We will be getting key Chinese data on trade and inflation, and no one is expecting strong results. In fact, we may also get more announcements from China on economic support measures. A bright spot there are property sales, however, and recent retail data has been encouraging as well. And overnight data on new September lending came in very strong. China is considering aggressive new curbs on coal consumption as it accelerates efforts to transform its economy and tackle climate change. The swiftness of the moves it is making in this area is certainly unsettling countries like Australia. The Europeans are reported to be readying more QE as their next rate assessment is due on October 23rd. And the US will publish data on retail sales, inflation and consumer confidence that will be closely watched this week. Over the weekend, Fed Vice Chairman Fisher said that a rate hike in 2015 is an expectation and not a commitment. One way countries could bolster their tax base is to tax multinational corporations more effectively. The OECD has said it could raise up to $250 billion a year if they did that. The companies, however, seem to have much more agility than the governments, so it's hard to get too excited by the prospect. In New York, US Treasury 10-year yield benchmark inched higher again on Friday and is still not reflecting the debt ceiling issue. It is currently at 2.09%. The local financial press has been making a lot recently about the rise of the cost of CDS spreads, the cost of insuring against credit risk. They had been rising sharply until about the end of September, but since then they've fallen more quickly than they rose. They're down more than 15% from the peak, now back to levels we last saw at the end of August. Still, they have another 15% to fall to get back to the long-run average for 2015. High CDS spreads make retail deposits more attractive for bankers than wholesale funding. The US benchmark oil price is unchanged at just over $49.50 a barrel, but Brent is marginally lower on $52.50. The gold price, however, jumped at the end of trading in New York and London last week, now at $1,157 an ounce. New Zealand dollar starts quite a bit higher this week. It will open at 67 US cents, 91.3 Aussie cents and 59 euro cents. The TWI 5 is at 71 and it's highest since July. And later this morning we'll get the September data for house prices from the RAINZ. And on Wednesday the government will report its audited financial results for the end of June. And on Friday, local CPI data is to be released. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.